Good day. My name is Lakshay. I want to bring you an update on the CEL Token short squeeze. The date is June 23rd, 2022. If you don't know anything about it, it's the biggest short squeeze that is happening in the current atmosphere of the bear market right now. So if you haven't checked it out, there are several reasons to check it out. I've already posted several videos on that, and you should check it out. This video is going to be a combination video. So I'm going to do two things here. I actually just spent more than an hour and a half going through a video that Nick Drakon did. The first half of this video was an interview sort of thing with Jade, who is involved in the CEL Token short squeeze and who has published a Medium article on it, which has gotten a lot of traction, who has been spreading the word, and who is also participating in the CEL Token short squeeze, and has been putting in a lot of effort to promote the CEL Token short squeeze. The second half was Nick going through part analysis, part speculation. So I want to address a lot of misinformation that was in there. But normally, as I would do such videos, I would go through the entire video, show you the video, and then also respond to it by pausing the video from time to time. However, since that video is almost 90 minutes long and I don't want you to be here all day, I don't want to do a 6-hour video marathon. I'm quickly going to go through all the points, but I'm going to link to that video in the description, put a link to that video in the description. You can go on and watch it and then come back and watch my video if you want to look at some of the points that Nick was talking about and how he might not be the most accurate source of information and data that you might want to consult. With that said, let's get started. So secondly, I'm sorry, before I continue. So I said this was going to be a combination video. The second half is I'm going to give you some accurate statistics as of right now, which will actually contradict some of the statistical analysis that Nick provided in his video. So let's get started. So the first thing that stood out to me was he said, I'm a full-time investor, but also primarily in crypto. Now, this is not financial advice for anyone, including Nick. But if you're an investor and you're primarily in crypto, that just means you have bad risk management, because crypto markets tend to have huge cycles. I mean, they go up 3, 4, 5 times from the previous all-time highs during the bull runs, and then they crash 80, 90, 95, even 99% for some assets during the bear markets. So if you are primarily a crypto investor, you have a portfolio that swings wildly unless you really know what you're doing. And if that is you, Nick, that's great. But for most of us, if you're going to be an investor and primarily in crypto, that's not a great idea. Of course, crypto grows more rapidly than everything else. But as a great investor, what you are first and foremost is a risk manager. And part of that means asset rebalancing and portfolio rebalancing. And so if something takes up more and more of your portfolio, you want to sell some of that asset, move that money to some other class of assets so that you're market neutral. And market neutrality is a huge part of risk management. And then the second red flag that stood out to me immediately at the starting of the video was that he said, I don't understand the human emotions behind this particular movement. So here's the thing about great investors. If you're a great investor, you're going to not invest emotionally, right? You're not going to get emotional about the investments, but you also understand that stock markets or crypto markets are places where people go to disagree with each other using their wallets, right? If you're long on something and someone else is short on something, all you're doing is you're disagreeing with that person or with that entity, and you're voting with your wallet. That's all there is to it. So it's a place where people go to disagree with each other. And smart investors understand that all investment is emotional for a vast majority of the people, especially retail. All investment is emotional. So if you don't understand the emotional aspects of how a market is working, you probably do not understand that market at all. And all great investors do understand the market sentiment while remaining detached from it, which is where risk management becomes handy. And I want to also point out to Jade, who said that she lost a lot of her money. A majority of her portfolio was in Terra Luna. I think that's what she said. If I misheard, I'm sorry about that. But she said a majority of her money was in Terra Luna, which is never a great idea. Again, same point. Don't let any one investment become majority. By the way, I keep looking downwards because I have all these notes, because that was a 90-minute long video and I had to take a lot of notes just so we can cover this shortly and in quick order without wasting a lot of time. Okay. So next, he's talking about how markets work and how people are short and long, and they're pretty much the same. And I've already addressed this in another video, how short sellers are not the same as people who are long. But I'll do that again quickly, just from a technical and financial perspective. If you're short, your maximum benefit or gain is 100%. Assuming you're not using any leverage. If you are, then you can probably get wrecked anyway, more likely than not. If you're long, your maximum upside is unlimited. When you're long, your maximum downside is 100%. When you're short, your maximum downside is unlimited. So even from the perspective of just a pure financial speculative investment method, being short is actually very, very risky. Being long is not that risky because all you can lose is what you've put in. You are not going to be asked to pay more. So if you buy something for $100 and that thing goes down to zero, well, you just lost $100, right? But if you short something for $100 and that instead goes to $10,000, well, you have now got to pay $9,900 out of your own pocket to cover that short, which is an extremely bad situation and can completely wreck you. And this is without leverage. If you have leverage, well, guess what? There is no way you can be protected against a short moving against you. So shorts and long are not exactly the same. And I've covered that in another video. You can find a link to that on my profile on my YouTube channel. Now, he says he has no moral dilemma with people doing shorts, because they are effectively doing what effective markets do, right? So people who are short are essentially weeding out weak companies or companies that are bad investments or companies that are bad at their business models, and that's his argument. Well, here's the thing. In the last week alone, I'm not going to name any names, but Celsius competitors have needed bailouts, while Celsius has continued to buy CEL tokens and other assets on the open market to pay out weekly interests. The only thing that is wrong about Celsius right now is that the withdrawals have been temporarily halted. Okay, and through the course of this video, I saw that Nick was absolutely very negative about Celsius network, and he made a lot of statements without posing any proof, because there is none. So I'm going to talk about those. So as Celsius continues to mitigate and manage risk, they're bringing down their liquidation price points, right? Their liquidation price point was about 17 or 18,000, and then it went down to 14,000, and now it's 13,000. And I'm sure they're going to post additional collateral if they need to in order to bring their Bitcoin liquidation price down, because that's what they need to do to survive. Everything Celsius has done in the last couple of weeks alone leads me to believe, and this is of course an opinion, okay? This is not financial advice, but this particular statement I'm going to make is my opinion. In my opinion, that Celsius is doing everything it takes to survive. And that does not look like a company that is ready to throw in the towel. I mean, if you're ready to throw in the towel, why spend millions upon millions of dollars bringing down your liquidation positions? Why halt withdrawals if you're just going to have to tell people, sorry, your money is gone anyway? Why pay out the weekly interest if you're not going to pay it out anyway? Why buy all these interest tokens on the market? You wouldn't do any of that if you were insolvent. So he talks about, there is no moral dilemma about this happening, this whole short situation happening. And I tend to disagree with that. Actually, CELCat did an amazing video a few days ago where he talked about this chain of events that is verifiable, that you can go and check out right now. And you should go and check out that video right now, where he talks about how Celsius, and more importantly, why Celsius was targeted by all these fudster scumbags, as I like to call them, right? There's a reason behind all of this happening. There is a reason behind, again, markets are emotional. So why we had a bank run, there's a reason behind that. And that is covered to a great extent in CELCat's video. You can find that video in the description below, or maybe even on an end screen card somewhere over there on the top. And he talks about how this is a revenge ploy first and foremost. And I've already done a video on that, so I'm going to link to that. But basically, actually, I've done 2 videos. So the biggest reason why we want to participate in the CEL short squeeze, even if you're not a Celsian, is not for revenge. It's because you don't want market manipulators doing to the crypto markets just what they've been doing for doing to the legacy markets for hundreds of years now, at least decades, if not hundreds of years. Okay, I posted these videos on June 20th and June 22nd, so you should go out and watch them now. I'll give you another reason to participate in the CEL short squeeze. Even if you invest just 50 bucks in it, it's also a very exciting thing to track. You know, if you are constantly, looking for excitement, at least for me, it has been a very exciting journey ever since I got involved. So it could be something like that for you as well. And finally, he says Celsius as a company is at fault. Okay. Like I said, the only fault they have is that withdrawals are halted right now, but they become completely faulty, or they're at fault 100% if those withdrawals are never ever reopened in any capacity. Now, if people are never restored their coins, well, Celsius is to blame. But until such a thing happens, this is pure speculation and nothing more. It's opinion, it's libel, it's speculation, and that's all there is to it. We had a bank run, and I'm going to do another video on Celsius Network because a lot of fear, uncertainty, and doubt that you're seeing right now, this fear smear campaign that is going on right now, trying to detract you from the CEL short squeeze, is based on the idea that Celsius is somehow insolvent and Celsius is never going to recover from this, or Celsius was actually scamming you. I see comments like this on my YouTube feed all the time, on my Twitter feed all the time, and Celsius was a company that scammed users out of their coins, and that needs to be addressed. So I'm going to do a video on that shortly. But for now, you can only say that Celsius is at fault if they lose your funds forever and if they never reopen withdrawals. For now, what they've done, at least according to me, and I do have a lot of money on Celsius right now, even though it's not as much as it used to be 2 years ago, it's still a lot because I rebalance, of course. It's still a lot of money. It's nothing to sneeze at. And I don't think that they're never going to reopen withdrawals, but that's also just opinion at this point of time. So let's move on. Now, this is where the interview with Jade ends, and he starts talking about his analysis. And we're going to look at some on-chain data on my laptop as well. Yeah, let's go through it point by point. So first thing that stood out again is the statement that he made. He says, Celsius should not exist in 12 months' time. And I'm like, what? Why? Who told you that? On the basis of what? And of course, it's just a statement he casually throws out, just like that, because it's such a callous statement. It's such a non-commitmental statement, but it is impactful. You've got thousands of people watching your videos and you make statements like that. And, you're saying Celsius should not exist in 12 months' time without giving a reason as to why it should not exist in 12 months' time. If I were Celsius, I'd probably sue you. Okay, then he gets to talking about how the interest rate has plummeted from 1,200% to 400%, and he goes on his screen and does some of that, which at that point of time might have been true. But if you go back to Celsius now, and this is where we are on FTX, so the estimated previous lending rate was 2,499% per year, and now it's 2,400% per year. Again, you can see that the interest rate is over 2,000% right now as of recording this video. Will this fluctuate? Yes. Will it go down to 100%? Yes. Can it go up beyond 2,600%? Yes, it can. Nobody has a crystal ball. Nobody knows what's going on except the data that you can see on chain. So just because at that particular time, at that particular spot of, snapshot in time, it did not continue to be 2,600% per year does not mean it's fallen to 400% per year now. You can look at the averages yourself. All that data is available on chain. So I'm going to let you do that for yourself. But I'm going to address a different point here. So he says, 400% is not as bad as 1,200%. Okay. Imagine you have a credit card, and I'm sure you knew someone, even if that's not you, you knew someone or you know someone who got wrecked because of credit card debt. You know how much credit card debt costs? It costs 25%. Well, give or take 10, okay, depending upon who you are. 15% to 45%, depending upon where you are in the world as well. So some of the credit cards I have myself have a 45% per annum interest rate. And I'd be completely wrecked with those because I know people who've been wrecked on credit card debts for decades now because they cannot pay back the interest. Even paying back the interest is hard enough for them. So when you say 400% is not as bad or 100% is not as bad, you're missing the point exactly, completely. And yeah, sure, if you can, you're paying 0.5% a day and you're making 20, 30, 40% in a day, sure, you can do that. But show me one person who's done that over a long enough period of time. And first of all, you'd be showing me a multi-billionaire, probably the richest people in the world, because 40%, 50% a day, let's do some calculation here. You have $1,000, okay? And you're doing 40% a day. So let's do that over the course of a year. Well, okay, that's a lot of money. That's millions of dollars, okay? You do that over 5 years or even 2 years, let's say 3 years, right? For 1,000 days. And now you have billions of dollars. So it's $1.3 billion. So someone who can do that consistently for 3 years would have $1 billion. It's like one of those TikTok videos, stupid TikTok videos. Hey, how do you get rich? Hey, start with the 50 cents or start with 1 cent and double your money every day. In a month, you'll be a millionaire. Exactly. Doubling your money every day is not going to happen. Making 40 or 50% in a day is not going to happen. You're assuming a huge risk when you want to make 40 or 50% a day, which is what short sellers do. You're assuming a huge risk. Secondly, these loans are not underlying in USD. By that, I mean, if you borrow CEL, your interest is also in CEL. So if you borrow 10,000 CEL tokens at 2,000% per year, and you come back after a year, let's say after 1 year, you're not going to return 10,000 CEL tokens, which was the capital you borrowed, and interest in USD. You're going to repay both your interest and your capital in CEL tokens, and you're going to repay 210,000 CEL tokens for the initial 10,000 that you borrowed. So just to have, break it down to a daily interest rate, okay, anyone can do that. So it's 2,600% or 2,500%. So that's 26 times to the power of 1 by 365. And that's basically 0.8% per day. And that doesn't sound like a lot if you can make 20, 30, 40, 50% in a day. But consider the downside. The downside is unlimited. The upside is only 100%. You got to repay in the very token that you're taking a risk on, that you're betting will go down. What if it doesn't? So short sellers are, financially speaking, not going to make a lot of money. And that has been seen on the stock market. Most of the hedge funds that you know, successful ones especially, are either long or the best ones are market neutral. And that's a very small percentage of all funds on the Wall Street. There is a small minority of short funds, and they historically do not perform as well as the long funds. And you just have to look at the stock market crash after crash after crash, and look at the graph where it goes over time. It goes up and to the right. Even after a huge crash, it will eventually recover and get to new all-time highs. It just happens that way. Look at the history of the stock market. Go back 40 years, 50 years. Look at the history of the stock market. And some companies do not survive, but if you're invested in, let's say, S&P 500 or one of the indices, SPY, SPX, whatever, you're just going to go up over a long enough period of time. You're going to crash over short periods, They're going to be temporary crashes, but eventually you'll go long. If you're long, you're going to go up. That's how it works, especially when you're living in an economy that is fueled by a lot of printed money. Anyway, next thing is something, he says something which he goes on to contradict later on in the video. He says, CEL token has no inherent value at all. And without giving a rationale as to why. Now, a few months ago, I did a video on why CEL token has utility, and additional utility would be great, but it does have utility as of right now, as of the way it is built. So you can go ahead and watch that video. But if you say CEL token has no utility just because it's not tied to the equity of the company, you're absolutely wrong. And I'll give you an example. The reward points that you get from Hilton Honors, right? If you're a Hilton Honors member, or any credit card or hotel or airline reward points, they would be completely meaningless by this by this argument. They're not. They have value. You've got huge websites with millions of followers trying to get points. Why? Well, those have value. You can redeem them for real stuff in the real world. That's what value means. That's what economic energy means. So if you get a 30% higher interest rate by receiving your interest in CEL tokens, well, guess what? That's 30% more stuff you can buy. That's a 30% higher gain. As simple as that. So it does have value. And even if it's not tied into the equity, which it never was and it probably never will be, it does have value. This argument does not hold. Next, he talks about Terra exposure, Celsius having Terra Luna exposure, and that is completely and abjectly false. Again, I'm going to refer the CELCat video, which he posted a few days ago, where he talked about how one of the reasons why Celsius network was targeted for fear, uncertainty, and doubt was them reducing and removing their exposure to the Terra network. So that's abjectly false. Now, more data, okay? So he's talking about shorts are covering faster than longs are buying. Well, let's look at that data right now. So this is FTX alone, and this is the most recent data here. And then let's look at the perp market. So this is the spot market, by the way. As you can see, this is the spot market. Then look at CEL perp. So don't believe all these numbers that all these guys put out. I mean, he says that the shorts are now down to 5 million, 4 million, something like that. And that's not true at all. You saw 7 million on the market, and you saw, okay, so let's look at the open interest on the perp market. The perp market has an open interest of 11.8 million, roughly 12 million. And the interest rate or funding rate is negative. Now, if you hover over this, it says predicted funding rate, longs pay shorts if positive, and shorts pay longs if negative. Okay? Longs pay shorts if positive, but this is negative. So shorts are paying longs, which means of this 12 million, more than half is shorts. Shorts have more than 6 million in open interest here. So I posted a tweet a couple of days ago and I said, Otis was saying it was close to 32 million based on this data. I'm going to show you that data. So if you go to the CEL USD spot and you do a grouping by, let's say, 10 cents, you're going to see 37 million now. It was 32 million yesterday. 37 million people trying to buy CEL token at close to $0 or about 1 cent, right? 0 cents or 1 cent. And if you look at this, it looks like, okay, maybe there's a lot of interest at close to $0. So that means that might be that's mostly shorts, and that's not accurate. It could be other people like you and me who are probably long, but are kind of, just waiting for a dip, a dip to 1 or 2 cents so that they can buy a lot of CEL tokens so that in the next bull run, they could go ahead and get retired. This does not mean, the 37 million total wall here does not mean that 37 million shorts need to be closed. But that also does not mean that if you go to the spot margin lending, the first number that you see up here is the total picture. That's not the total picture. You got to look at spot as well as perpetuities, okay? So what do we have here? Well, what we have here is, Nick is right, there are about 10 to 12 million CEL tokens available on all exchanges right now, and 10 to 12 million shorts as of this moment right now. Shorts are also paying 2,500% per year interest, as you can see right here, or 2,000 or 500 or 800. It keeps on fluctuating. All I'm saying is it's unsustainable for everybody, even Warren Buffett. Nobody can pay that kind of interest, especially if the underlying asset goes up in value or has the potential to go up in value and completely wreck the short seller. So he says that shorts are covering faster than longs are buying, and that is abjectly false, as you can see right here. Side note, a lot of people have been saying, oh, everyone participating in the CEL token short squeeze is going to get wrecked. Retail is going to get wrecked and shorts are going to walk away with a lot of money. That's only true if retail bets more money than they're willing to lose. We have been telling you since day one, only bet what you're willing to lose. If you're going to get wrecked with this one trade, you're not doing it right. You cannot ever put yourself in a position where a trade going bad wrecks you, which is, by the way, what short sellers do all the time because they are stupid and greedy. And if they win, sure, they've got deep pockets and they know how to run smear campaigns. But if they win big. But look at what happened to Melvin Capital, which went up, which is what Wall Street bets went up against and retail went up against, and they're bankrupt. Just recently, they filed for bankruptcy. So no matter how deep their pockets are, they're taking an enormous amount of risk just to make a lot of money very quickly. They're just greedy, and that's great for them, I suppose. But for us, time is our friend. Time is not our enemy. Time is their enemy. You know, you buy $100 worth of CEL tokens, they go down and it's worth 20 bucks now. Who cares? You know, you lost 80 bucks. If it goes down to $0, who cares? You're long. Time does not work against you. Your maximum exposure is 100%. So don't bet more than you're willing to lose, and you cannot get wrecked. It's as simple as that. Okay, next thing, he says people will take profits on the way up. That is true. The question is how many and at what price point. So some people I've seen, they're saying, okay, I'm not going to sell until CEL token gets to $10. And I keep reminding them, you don't have to sell at $10. But if they do, they do. You know, you do you. That's fine. People are going to do what they want to do. Except we have a statistically significant number of people now who are really ready and committed to this and who really understand the mechanics of it, that they're going to ride it out all the way to $100 or more. You know, you see all these screenshots all the time. I keep reposting them, retweeting them on my Twitter account. And the reason for that is because, well, you got to know what others are doing. So people will take profits on the way up. So it can't go all the way to $100 is not really an argument. We're talking about the last traded price. So even if one CEL token is traded at $100, technically you got to $100, you know, but it really depends upon the holding power of everyone participating in the CEL token short squeeze and their motivations. If their motivation is only to double or triple their money, well, guess what? They could have already done that by now and gotten out, and some people already have. So it's their prerogative. I mean, it's really up to them to do what they do. I'm just going to say, don't bet more, and this is not financial advice, but don't bet more than you're willing to lose, and then don't back down. Don't yield an inch. I'm personally not going to sell under $100. And if it's $95, I'm not selling, you know. They got to pay me $100 or else there's no deal. Because I am not putting myself in a position where I need to sell ever. I can have this go, I can write it off right now. I can write off my investment in the CEL token short squeeze right now as an expense and call it a day, because that's how I'm going to participate in this. Okay. Next, he makes another speculative statement. He says, shorts who have already covered are not underwater. This is pure speculation. There's no way for Nick or anyone else to find out how shorts are doing, how well they're doing, or how poorly they're doing, because there's no on-chain data to verify this. Okay, now, next argument. He says $100 is not rooted in reality. Let me give you some facts. As of right now, at the moment of recording this video, shorts are slightly on the negative side, in that the balance of power is slightly against them, and longs have a slight advantage right now, which is us. We have a slight advantage. So short sellers have a slight disadvantage right now, and long sellers have a slight advantage over the shorts, or squeeze. People who are participating in the squeeze have a slight advantage. Here are the factors to consider. Every single day, or almost every single day, we see CEL token short squeeze trending on Twitter. Everyone's talking about it, and more people are participating in it every day. And if you don't believe me, go to my Twitter profile and check out all the retweets I've been making. Some people are participating with 3,000 CEL tokens, some with 100,000 CEL tokens, some with 100 CEL tokens. It does not matter. A lot of people are getting into it, and we're just getting warmed up. We are not in a hurry. I gotta keep explaining it to everyone at all times. This thing is enormous for us because time is on our side, not the short seller's side. We are not the ones paying 2,000% per annum interest, or 400%, as Nick likes to say. We are not on the line to pay anything beyond our initial investment in terms of buying the CEL tokens. That's it. That's all we have on the line. We can wait it out. The shorts are paying every single day. They got to pay the interest every single day. And their interest is in CEL tokens. So as the price of the CEL token keeps going up, their interest in absolute USD terms is going to be absolutely crazy. So they already don't have the liquidity. Next, CEL token. I've not talked about this, at all so far. But Celsius goes out and buys 1 million CEL tokens every week for the weekly rewards. And as I said, only about 10 million CEL tokens remain on the exchanges as of right now. If you buy some CEL tokens, put them onto your own wallet, hardware wallet preferably, and go out and place a limit order on 1inch for $100 to sell those CEL tokens for $100 each, well, guess what? Those CEL tokens are effectively out of circulation until the price gets to $100. So Celsius is buying every week. More people are participating in the CEL token short squeeze every single day. And shorts don't have the kind of advantage that Nick would like you to believe, the numerical advantage that he would like you to believe. And price just has to reach $100 once. You have to have one last traded price at $100 for us to have accomplished this. But again, if none of us decides to sell for less than $100, what are the short sellers going to do? Or for that matter, what is Celsius Network going to do? Because they also need to buy a lot of CEL tokens every week for their weekly interest payments or the weekly reward payments. So what are they going to do? Well, they're going to buy it from us at $100 a piece. Now, again, Nick is right. Some people will take profits on the way up. That is how the markets work. So we're always going to have some liquidity. I've already discussed this with some people on Twitter who asked me what happens when the price gets there. And this has no bearing on Celsius, though, because they can change the rates. And, their goal is to pay out the interest. So if the price goes up, the interest paid out also goes up. But that is fine for them. It's always been fine for them. It was fine for them when CEL token was $8. It's fine for them when CEL token is at 20 cents. And then another statement from Nick. He says, oh, I can do research, but I won't because it doesn't matter as much. So a lot of his statements were coming from a guy who has not done a lot of research. And you should understand this. So you should take everything anyone really says with a grain of salt, but especially Nick, because he's telling you he hasn't done the research. And finally, he says squeezers are exhausted. Look at me. Do I look exhausted to you? Look at the momentum. Look at the markets. Look at the sentiment. I mean, does anybody seem to be exhausted to you? The only people who can get exhausted with this are those who overextend themselves or those whom time is killing with the interest rates. That's the short sellers. So don't overextend yourself and plan to ride it out for 6 months, 12 months, whatever it takes. And you're going to be fine. You're not exhausted. He's wrong. All right, so now he makes some comparisons with GameStop, and this video is already pretty long, so I want to get it over with quickly. I'm going to go through these points quickly. He says, well, GameStop was a representation of company equity and company assets. CEL token is not. Well, explain to me what that has to do with the short squeeze. The only thing that matters in a short squeeze is demand and supply. It doesn't matter what the company assets, how the company assets are directly or indirectly correlated or not correlated with the CEL token. It doesn't really matter at all. Then he said GameStop was in trouble, but the CEO Cohen had a plan. But Celsius does not. And you know that. How? Because based on what I am seeing, Celsius definitely does have a plan. They have been acting in the interest of self-preservation for a week and a half now. And everything they're doing is actually making it better for them to survive the bear market so they can come back stronger and better than ever before. Then he says that there were COVID tailwinds because, people were at home and there was a lot of interest in playing games. So that helped GameStop. Again, that has no bearing on the short squeeze. I mean, that may have some bearing on the company profitability and company revenues, but that, again, is not tied to the day-to-day fluctuations of the price of any asset on the market, which is absolutely based on the market sentiment. Fear and greed, that's what rules the markets. Smart money is decoupled from fear and greed, but it observes the market's fear and greed index and makes bets accordingly. Most of the money, retail money, is basically fear and greed. Markets are greedy and markets are fearful. And Warren Buffett will tell you that you should get greedy when everyone else is scared and you should get scared when everyone else is greedy. So he's got a point. Next thing he says, media championed the cause of GameStop but not of Celsius. And media calls Celsius a villain. Well, let's talk about media. Which media are you talking about here, Nick? Did you see a report on CNBC or Fox News that I missed somehow about CEL token short squeeze? The only media you're talking about are the same influencers who are fudster scumbags, and they're the ones who've been calling for the collapse of Celsius, who've been hoping for the collapse of Celsius, and we know what they're doing. We are well aware of their tactics, and that's all the media that fudsters have. There's no mainstream media involvement in this. It's much smaller than that right now. It's probably always going to be much smaller than that because we are talking about a token with a $600 million market cap. Total market and circulating supply is like $100 million right now, or even less than that. Okay, next argument he makes is about shareholder rights. So buying GameStop equity or GameStop stock gives you shareholder rights. And again, what does this have to do with the short squeeze or the mechanics of it? I mean, come on, come on. You're scrambling, And then he says that CEL token has been short down since its inception. Well, let me tell you something about the history of CEL token's price. It went from 3 cents to $8.05 in about a year and a half. That's 216 times. That's 21,600% boost in the price. It ended in June of 2021, which is about a year ago now. So since then, the price has been crashing, but that's bear market. Bitcoin has crashed from 69,000 all the way to more recently 18,000, and today it's 20,000. But the crash is not done yet. So everything else is crashing, but you single out the CEL token and you say it has been sold down since inception. Well, if that were true, it would be less than 1 cent right now, because I can tell you right now, for a long time, CEL token circulated between 3 cents, 5 cents, 8 cents, and it actually did crash from 8 cents to 3 cents before it took off and went to $8. Now, he goes on to state and admit that CEL token has a place and utility. And I just wanted to point out that this was in direct contradiction with what he said earlier about the CEL token, in that it has no utility. So again, at best, he did not perform a lot of research, or he didn't know what he was talking about. At worst, I'll let you, the viewer, make the conclusion. And then another thing I noticed was, and he admitted that he cannot pronounce Alex Mashinsky's last name, but he knows somehow for a fact that Alex is complicit in the collapse of Celsius. I don't know Celsius Network or CEL token. He was talking about one of those two, maybe both. He says Alex is complicit in the collapse, while also admitting he does not know how to pronounce the last name of the guy. And that's just going to go on to show you how much research he has done on that. And again, does he have any proof? Does he post any proof? No. Go check out his video for yourself. No proof. Just libel, just statement. It's not even an opinion. Oh, I think maybe Alex was complicit in the collapse. No. Alex is complicit in the collapse. I don't know his last name. I didn't perform enough research to know his last name. But I know he's complicit in the collapse. And then he says, oh, everybody is down right now. Nobody has a lot of cash reserves. Well, guess what? The market has 10 million freely circulating CEL tokens right now. All the exchanges have 10 million CEL tokens right now across the exchanges. CEL token is trading at less than $1 right now. You need less than $10 million to completely drain the market as of right now. And Celsius Network itself goes out and buys 1 million CEL tokens every week. How long does it take to drain out $10 million worth of tokens? One whale is all it takes. You could have one whale placing that order. It's all it takes. And I'm going to make some numbers, because it's very easy to make claims. But I'm going to show you what happens when people try to buy 10 million CEL tokens, okay? So let's say I have USDC and I want to buy CEL tokens, and this is Uniswap, okay? And I want to buy, let's say, $100,000 worth of CEL tokens. So Uniswap is going to give me a price, and it gives me a price of $1.01. That's $100,000. What happens if I have $1 million? $1 million is a very small whale, by the way. And the price jumps to $1.42. What if I have $10 million? How many CEL tokens can I get then? Well, guess what? The price jumps to $8. What if I had really deep pockets and $100 million? Where do you think the price goes? It goes to $175. Okay, let's say it's not $100 million, it's only about $50 million. Where does the price go? My guess is $100. Yeah, $87. There you go. Are you beginning to see this? There's not a lot of liquidity. You don't need a lot of capital to make a short squeeze happen here. And he says, oh, we are all wrecked as a community. Well, guess what? You're wrecked because you're largely a cryptocurrency investor, No serious investor is invested in one class of assets so strongly that they get wrecked with market cycles, actually. Finally, the last thing I want to touch on is Celsius terminal value is equal to 0. Probably, he says, probably over. Celsius is probably over. And then this is a guy that takes pride in running numbers and doing some on-chain analysis. He posts no proof as to why Celsius is insolvent or why it could be over. And he uses a lot of could, The word could is a staple in this particular segment. It's like Celsius terminal value could be 0. Based on what? People who deposited billions and billions of cryptocurrencies, dollars worth of cryptocurrencies in Celsius network did not seem to think that that company was worth $0, So all in all, this was, and then he goes on to talk about Celsius 2.0, which I don't even want to get into because it was so ridiculous. It's like he already knows that Celsius is going to collapse somehow, and the only way somebody can get their money back is by a reimagining of everything. And none of it is based in fact. Nobody has any proof for that to be true. So this video, gets like a C- from me in terms of analysis and in terms of data and in terms of factuality and the factual accuracy of the facts presented in the video. So I think that gives you some overview of where we are right now. The CEL token is down. I'm going to do a video shortly about why it is down and why it seems to never recover, or why it seems to take so long for CEL token prices to go up. But as you've seen, shorts are about numerically, outnumbered by longs. Shorts outnumber the available supply of CEL tokens, but only slightly right now. As you keep on draining CEL tokens off of exchanges, and it does not matter whether you buy from FTX or 1inch or Uniswap or QuickSwap, wherever you buy this, or Polygon, no matter where you buy this, as long as you buy the CEL tokens and remove them from the exchange to your own wallet, the one that you have the seed for, that's it. You've drained the liquidity out. And then at your own leisure, go out to oneinch.io, not .com. I said .com in one of my previous videos. Someone corrected me. oneinch.io, and place a limit order, not a market order, a limit order for selling your CEL tokens at $100 or more, and then grab a bucket of popcorn and watch this explode. Talk to everyone about it. This CEL short squeeze is far from over. My name is Lakshay. This video has been long enough. Thanks for going through everything that Nick said with me. If you want, go check out that video. There's a lot of misinformation in it, like I said, but go check it out. And I hope you have a great rest of the day. And keep on participating in the CEL token short squeeze. Remember, time is with us and against the short sellers. So as long as you don't bet the money that you're going to need in the near future, you're going to be fine. Time is your friend. Time is their enemy. Okay? It's your friend. It's the enemy of the short sellers who are paying what? 2,500% per year now? That is ridiculous. They're going to get wrecked. Have a great day.